This hearing will come to order.
Europe is, of course, a key strategic and economic partner of the United States, and we have a huge stake, huge economic stake, huge national security stake in the success of Europe's efforts to contain its crisis. Our economy, as you acknowledged, is gradually getting stronger, but we still face a lot of tough challenges ahead as a country. The risks surrounding Iran, which are adding to upward pressure on oil prices. Now, the European economies that are caught up at the center of this crisis have put in place some really very tough reforms over these last 18 months or so. And these reforms have been aided and assisted by very substantial actions by the European Central Bank. And together, those efforts, reform with the firewall and a more active ECB, have helped calm financial market tensions. But I think it's very important for us all to recognize that Europe is still at the initial stages of what will be a very long and difficult path of reform, and that path of reform of crisis resolution presents significant risks to the American economy still.
So how do you see that future coming to?
When Europe's in crisis, as we've seen over the last 18 months, very painfully, you tend to see stock prices fall around the world. That's very damaging to confidence here and around the world. And the typical pattern has been when Europe has been in crisis, this is a good sign of confidence in the United States, but the dollar has risen relative to the euro. And so that's another effect on the United States in this context. But you're right to say the effects are very significant. It's been one of the major factors that has kept growth in the United States slower than we would like. Not the only factor, but one of the most important factors. If they are stronger in the future, that'll be stronger for us. And that's why, again, it's so important that we encourage them and work with them to help them get their arms around this problem.
Thank you very much, Mr. Treasurer.
China's exchange rate has now appreciated significantly in real terms against the dollar, not just over the past 5 years, but over the past 20 months or so. And although they still have some way to go in achieving a more market-oriented exchange rate that better reflects economic fundamentals, we're seeing very substantial growth in U.S. exports to China.
It's tripling its balance sheet, but this massive intervention is just masking true market interest rates that are making it easier for the administration to